Make sure we're good to go here. All right, there, ladies and gentlemen, boys and girls, and children of all ages, you're now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. If you're checking this out live on our platforms, Facebook and YouTube, definitely hit that like button and hit that subscribe button. Hit the bell icon to let us know that you're getting the notifications when we are live. And I want to appreciate you guys and girls for coming in. But we have a very interesting episode today. We're going to be talking about the leading economical indicators. What I mean by that is where the economy is going. I know what people hear in the news, what people say in the media, but today we're going to talk about the 10 leading economical indicators. A leading economical indicator is an indicator of where the economy is going. So these are leading. Do you have leading economic indicators? Do you have lagging economic indicators? Leading is where the economy is going. Lagging is what's already happened in the past or whatnot. So today we're going to focus on leading economic indicators. We're going to talk about a little bit of market news, but the big focus today will be leading economic indicators. I'm going to show you guys and girls how to look those things up, how to read them, what they are. So y'all got a very good educational episode coming to you guys and girls, helping you become a better investor. Right? Julia, what's going on, Miss Julia? Thank you for checking in on the live. So the first thing we're going to get into, ladies and gentlemen, we're going to talk about what are the leading economic indicators. So here we go. We have, make sure I count these out right. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. All right. Hopefully I didn't miscount that. But the first one is the average weekly hours in manufacturing. The weekly hours of manufacturers, right? Luminaire Weir said, "Is U.S. economy has to be very careful." Okay, we're going to look at that. See, a lot of people look at the economy and they say, "Oh, well," they go off of the news or what they may think or what they may feel. But here we go, ladies and gentlemen. The first thing is we're going to talk about leading economic indicators. The first economic indicator is the average weekly hours. Average weekly hours is a leading economic indicator, and we're going to talk about why is that important. In manufacturing, yes, we look at average. It's going to help you become a better investor as well. So you don't have to go by the news and what you think. Average weekly hours, and we're going to talk about why they are important. Average weekly hours in manufacturing. I'm going to pop that up on the screen for the people that can see this. Average weekly hours. Why is that important? Why do we follow average weekly hours of manufacturers? So when people who are in manufacturers or in the manufacturing industry, of course, they make things. So if you work at a factory, so people who work at a factory, they have to make things. So when people work at a factory, they have to make things. So when people work at a factory, they have to make things. So when people work at a factory, they have to make things. So when people work at a factory, they have to make things. So when people work at a factory, they have to make things. So when people work at a factory, they have to make things. So when people work at a factory, they have to make things. So when people work at a factory, they have to make things. So when people work at a factory, they have to make things. So when people work at a factory, they have to make things. So when people work at a factory, they have to make things. So when people work at a factory, they have to make things. All right, there. I don't know what happened there, but the average weekly hours. So, okay, let's see what y'all say in the comments. Miss Julie Michael says, "Good evening, Prince and the Money Fan." That's Mike. He's coming out of Toronto. Him and Mr. Lemonade over there. I've been following Lemonade. Big Alan Williams. He's checking. I think he's still out there in San Diego. What's going on, Al? Miss Ruby, one of you the ones the other day that said you had a bunch of shares of Tesla and Apple? What's going on? Evolving with What's going on, Miss Evolving Wisdom? She said, "What's up?" Just saying hi. I appreciate you for checking in. I like when she check in. Miss Evolving Williams. Some people get in my comment section and go crazy, and she be in there like, that ain't happening today. I appreciate that. Right? But the average weekly hours of manufacturers. Why is this important, ladies and gentlemen? This is important due to the fact that if manufacturers are not working, how can you create product? Think about myself. Let's say, I've written books, and the more you guys and girls order, the more a school may order, they may call me or whatnot. I put in an order. And the more that I order, Oh, Miss Ruby said, yes, she is the one. Somebody was in the comment section talking about you buying shares and something like that or whatnot. But he said, Mr. Lemonade. Yeah, that's you, Mike. You Mr. Lemonade now. I'm remembering that. But anyway, ladies and gentlemen, you track the hours of manufacturers because guess what? This is a leading economical indicator because if manufacturers are not working that many hours, how you doing, Miss Shirlene, Miss Baptiste? How you doing, Miss Shirlene Baptiste? And the whole hours, the whole point is to watch economical indicator, leading economic indicator. If manufacturing hours, weekly hours are slowing down, that means that it could be a slowdown in the potential economy. How does this make sense? Make it make sense for me, Prince. So the reason why is if you have, go back to my situation. I'm an author. I've written 3 books or whatnot. Let's say if you guys and girls just go, I just get crazy amounts of orders. So I put in crazy amounts of orders with my manufacturer, right? That means they have to work more and more and more hours to be able to meet my demand. Now, if you don't have, let's say if I'm not getting that many orders or whatnot, the manufacturers are not getting that many orders, product is not moving. So by watching the weekly hours of manufacturers, that can be a leading indicator of where the economy is going. Because I can tell how iPhone sales are doing. I can tell how what the Apple iPhone sales are doing by looking at their manufacturer. Right? That makes sense to you guys and girls? King Carter said, "What's up, Prince? I was showing my cousin how to invest and trade options, and I ended up making 50K on my paper account." See, this is King Carter. You got to be careful when you paper trade. You don't have any emotions. It's a different thing. It's 3 different emotions what I learned with money that I've seen so far. When you paper trade, it's not really your real money, so you're trading off what you believe, but your emotions are not there. So it's no emotion, so you can mess around and make a bunch of money. When you're trading, you get another emotion when you're trading your own money. You have no emotions when you're trading paper money. You have a different emotion when you're trading someone else's money. So it's one thing I can take a loss. I'd be like, you know what? If I lose $100 or $1,000 or $2,000, I'm fine with that. But it's the difference when I'm trading someone else's account. I'm investing for someone else. I don't want somebody to lose money. That's just how I am, right? That's just how I'm wired. So it's different emotions, but congratulations anyway. But you don't have any emotions there. Be very mindful of that. So average weekly hours are a very good leading economical indicator, right? Now, the second we're going to go to is the average weekly initial jobs claims, right? We talk about this every Thursday. Every Thursday, we get a new jobs claim. Y'all remember this? We get a new jobs claim every jobless claims. Every Thursday, we get to see how many people file for unemployment. Why do people pay attention to this? Because this is another economical indicator. Jobless claims. Every Thursday, the Department of Labor put out a jobless claims report. Why is this? Let's say today I lost all my income. I go in and I file for unemployment. That's a leading economical indicator because if people are filing jobless claims, if people don't have jobs, they don't have money. If they don't have money, they can't go out and buy in the economy. So the first one we mentioned is average weekly hours in manufacturing. That means that the manufacturers, the people that are in the factories who's making all these products that we buy and sell, what are their hours looking like? Are they increasing hours, lowering hours? So when you look at manufacturing hours, that's a big deal. Jobless claims. Jobless claims versus unemployment is 2 different things. We get an unemployment number once a month. We get a jobless claim every week. So just because I put in a claim doesn't mean it's going to be paid. So that's why the jobless claims could not match with the unemployment numbers that come out at the end of the month. So jobless claims is what people go in and claim. Unemployment is what has happened. All right. That makes sense to you guys and girls? The next one we're going to get into is manufacturing new orders in consumer goods and materials, right? Now these are all reports that come out that investors pay attention to. So if you are an investor, this is why you should pay attention to this, right? Here we go. Manufacturers new orders in consumer goods and materials. So how many orders are being placed to manufacturers? For a prime example, like I said in the beginning, if somebody ordered books for me and I go to the manufacturer and say, hey, I need 50 books made, right? Someone is tracking how many new orders do manufacturers get. This could be a leading economic indicator because guess what? If orders are slowing down to the manufacturer, that means that people could be slowing down. The economy could be slowing down as well. All right. The next one is kind of the I okay ISM index of new orders. And what this does, this teaches you another one where they pretty much, it's another company, not a company, but it's another institution that tracks orders. So you know what? And I'm going to pull up one of these reports too. I'm going to pull it up so you guys and girls can see on the screen as well. But don't worry about it. We're going to go through where you can get all of this from. This is the, make sure we got it right, manufacturing index called a purchasing PMI, right? The manufacturing index. I want to see the actual report. I'm going to pull up one of their reports so you guys and girls can see this, so you won't think that this is just a farce. Because I used to look at it too. People used to tell me things, but I couldn't look it up. Economical indicator. Okay. All right. Okay. See what y'all say in the comments. American Airlines is cutting 1,700 jobs in October when aid payback expires. Yes. I think you kind of got that incorrect. They're supposed to, well, I don't want to say you got that incorrect. September 30th is the last day that the PayPal protection plan is going to expire. So you've seen American Airlines and Southwest, what we already knew. We already knew with we already knew American Airlines and Southwest was going to cut jobs because when they got their PayPal protection plan, part of the deal was they couldn't lay anybody off until after September 30th. If they don't get a second round of bailout, then September 30th, you're going to see a lot of layoffs going. But this is the crazy part. When they announced they're going to be laying people off, you've seen airline stocks go up because they're going up because they're cutting their overhead, right? So let's take a look at the next one. Another one that y'all heard me say about this all the time, building permits. That is another economical indicator, especially in real estate. You can see where the economy is going when it comes down to building permits, right? So when we look at this, I got to say, hey, if everybody's losing their job, nobody's going to be buying houses. Have we slowed down on building houses? This is why people pay attention to building permits and new private home units. Are houses still being built? Or because before you can build a house, you must first put in a permit. Before you build a residential area, you must first build in a permit. And if you are a real estate developer and you think the economy is going down, are you going to be building more houses or less houses? If the economy is going up, you're going to build more houses. If you're going to think the economy is going down, you're going to build less houses. That's why it's very important to watch building permits. This could be a leading economic indicator of what's going to be happening in the economy. So building permits, we talked about how you can look those up. That's on the US Census.gov. Building permits. So the first thing we talked about the average weekly hours, meaning the hours that manufacturers work. We talked about jobless claims. You know, how many people filing for unemployment? Are the people in manufacturing working more or less hours? Are the manufacturers getting new orders? Are they getting new orders for consumer goods and materials? Because if people are not ordering from the manufacturers, from the warehouses, that means that people are going to be working less hours or whatnot. Then you got the IMS, the index for new orders. They track all the new orders that come to manufacturers. That's a big one. And we just talked about building permits. Are building permits going up or down? That's an economical indicator. Now we're going to get into, let's say here. Now you have business expectation. We're going to get, you know what, let's go. Let me share the screen with you guys. So to put all this in perspective, ladies and gentlemen, this is how you can look up the leading economical indicators. Here we go here. I'm going to share my screen. Let me see what y'all saying before I share my screen. Wayne Sutton, what's up? What's going on, Wayne? Michael Davis, he said, what's up, brother? I would catch the replay. I work at 12:30 to 11. I have to change my schedule to watch your live. Just kidding, but a great show. Thank you, Mike. Yes, today we're going over the economical indicators, so I definitely hope you get some out of it. Eric said, can you explain why DraftKings stock is soaring and they had a bad earnings call? You know what? We could look into that a little bit later. Let me write that down. DraftKings. I have been seeing a lot of information about DraftKings. They just IPO'd, I think, this year too. So here we go, ladies and gentlemen. This is called the conference board. I am here to shape you guys and girls. Here's the conference board. This is the conferenceboard.org. So what they look at is they have an index called the Leading Economical Indicator Index. So every month they put out a report that tracks the economical indicators, right? One second here. They put out a index. So right here they put out a report every month. The conference board leading economical indicators for the U.S. increased 1.4% in July to 104.4, following a 3% increase in June and a 33.1% increase in May. The U.S. LEI is the leading economic indicator, increased for the third consecutive month in July. It's a slower pace than the sharp increase in the previous 2 months, blah, blah, senior director, blah, blah, which remain, okay. So anyway, right here, these are the things, the 10 components that they're tracking. This indicator, this index is tracking the average weekly hours that I just named, the weekly initial claim job reports, manufacturing new orders, IMS index for new orders. They're looking at building permits, stock prices, S&P 500. They're looking at the leading credit index. They got an index that tracks credit. They're looking at the interest rate spread of the 10-year treasury bonds and the average consumer expectation for business conditions. So the sentiment that people are thinking. So they track all these 10 things and they compile them together every single month. Like you can see, this came out on Thursday, August 20th, where they tell you where in the US, where is the economy going? Ladies and gentlemen, this is the conferenceboard.org. The conferenceboard.org. This is where you see CNBC, the Yahoo Finances, the Bloombergs. They follow the conferenceboard.org to look at the economical leading indicators. Now, is this thing 100% on? Probably not. But this is another thing you should ask yourself. Hey, it's another tool, because so many people will say, hey, I know this, I know that, but where is your data? Where is your data to back it up? I know what we feel. You know, if you feel like I feel, you'll feel the same way, where you look at the economy and you say, man, you know, unemployment, we don't know, we're going back to work, who's losing money, who's making money, but you have leading economic indicators that you can look up for yourself, right? Now, when we look at, they talked about building permits. Now, you can't just look at all these reports, but just look it up. I had it out. Let me pull it up. Let me see if it's still up. I'm going to pull up the building permits report again, and we can get into DraftKings. Where is it at? Okay. I already got that one up. All right. So this is data that you can pull up for yourself to back up what you're thinking. So whatever you're thinking as an investor, you have to read financial reports to understand what is the economy. I know what we're thinking. I know everybody feel like that, man, the world's coming to an end. It feels like everybody is blah, blah, or whatever, but we have to look at it. So I'm going to pull up here, ladies and gentlemen. We're going to look at these reports that to make you a sharper and better investor. So right here, we're going to pull up. Let's see here. I'm going to share my screen here. We're going to look up the. All right. So right here, ladies and gentlemen, this is what you're looking at. This came out on August 18th at 8:30 a.m. Monthly new residential constructions in July. So in July, how many homes were built? Right here, they are tracking on the census.gov. This is the census.gov, CENSUS.gov. This is giving you the new constructions for July 2020. These are the building permits, housing starts, housing completions. So we want to know, building permit is when you put in a permit saying, hey, I would like to build a residential house over here on the left-hand side. Then, okay, now that the permit is approved, did you start building the house? So this tracks, did the house get started? Then when you start the house, did you run out of money and stop building them, or did you complete? So right here, they're looking at, okay, how many building permits were submitted? How many houses got started on, how many houses got completed on, and the next one comes out September 17th, right? So right here, when you look at this, you have to look at this is telling you how many permits got started. Did it increase? Look right, they tell you right here. Here's the building permits. Privately owned housing units authorized by building permits in July, what is a seasonal adjusting rate of 1.4 million. This is 18.8% above the revised rate at 9.4%. So okay, above in July rate of 1.3 2019 of 1.3 3.6 million, 1.3 million. Single family authorized in July were at a rate of 1.8 or whatnot. So it goes into the building permits. Then it tell you the housing that got started and the houses that were completed on, right? So this is a very good economical indicator to tell you what's going on in the economy. Are we building houses? Are we building more houses? Are we building less houses? Are we just leaving houses out to dry? So right here on the census.gov, this tells you. So many people will say, well, Prince, I think this, I think this. This is how you can speak with and know and put into your own pipe. Like people say, put into your own pipe to smoke or whatnot, or what is happening. The next one is a site we always go to on the show, the NBA.org. This is the Mortgage and Bankers Association. They always track loans because the first thing I want to see, shares of mortgage loans and forbearance decline. Forbearance, this is stopping people from foreclosing. I want to see, are foreclosures going up? Are we going up on foreclosures or down? Here we go here. Eric. Okay, so we're going to look at that. What's going on, Eric? Julia says, my Rocket mortgage shot up last week, 42. Currently, I'm not pissed anymore. Congratulations, Julia. I see Mike saying this. So right here, ladies and gentlemen, on the NBA.org, they are reporting, look, I want to know, if the economy is so bad, are people filing for foreclosures? How many foreclosures are going up or down? We should be seeing more foreclosures. So many people will say what they want to say, but this is how you becoming a better investor, by looking at people foreclosing on, right? And where are you getting this information from? So right here, they're saying shares of mortgage loans and forbearances declines slightly. Now, a forbearance is the government stopping people from losing their houses. So part of the stimulus package, reason why we haven't seen foreclosure go crazy, because part of the stimulus package, if you have a government-backed loan, a VA loan, or FHA loan, you cannot be foreclosed on. So this is a forbearance. This is bearing people from foreclosing on people, right? And so I follow this. I want to see, are more people filing for forbearances or less people filing? This is a leading economic indicator, right? So you can look up manufacturing hours, their workers, right? SXL says, good stuff. Appreciate it. Appreciate it. Glad I can help. So when some people will talk, some people will look at a news outlet. You don't have to watch CNN Money. I mean, great show. Yahoo Finance. And people look at that and say, well, this person said the economy is doing bad. But what is the data? Let's pull up the data, right? So now we got to look at Luminary Winds. You're right. Foreclosure not indicated until 1 year from now, right? But let's look at the forbearances. How many people are filing for a forbearance? Let's take me for a second. I have a mortgage. If I lost my ability to pay for my mortgage, I can file for a forbearance. So how many people are filing for forbearances? Are they going up or are they going down? That's a leading economic indicator, right? So y'all brought up this DraftKings stock. Let's take a look at DraftKings, right? Let's take a quick look at DraftKings. Let's take a look at DraftKings. Now, do things happen all the time? Yes. And shock everybody, of course. Okay, so DraftKings went up 9% today. Nice. Let's see, why did they go up? Let's look up their earnings report. Why did they drop? Okay. Okay, so what? Here we go here. Let me log into my account here. So right now, ladies and gentlemen, I'm going to pull up DraftKings. All right, so they went up. DraftKings went up 9% today. Let's take a look. Okay, let's take a look at their earnings. Okay, second quarter earnings. They missed. All right, so they did miss on their earnings. So let's go to DraftKings investor relation. Investor relation. So, ladies and gentlemen, I'm looking up DraftKings right now. Let's see here. Looking at their finances. Let's see the press releases, see what they put out. All right. So here we go, ladies and gentlemen. We're going to pull this up for you guys and girls. Okay. So DraftKings reports a strong quarter two revenue despite limited sports calendar. So, okay, this came from Boston. DraftKings today reported financial results for the second quarter of 2020 for the 3 months ended in June 30th. DraftKings reported revenue of $71 million compared to $57 million during the same period in 2019. So they were saying this time last year they reported $57 million in revenue. Now they're saying they only had the revenue is up by $71 million. On a pro forma basis, to try to fit the company in combinations with Unlimited, Deep Diamond Eagle. Okay, as if it has completed in January. Revenue has been $75 million in the second quarter. Revenue would have been $75 million in the second quarter of 2020 compared to $83 million during the same period 2019. DraftKings ended the second quarter of 2020 with over $1.2 billion in cash and no debt on its balance sheets. So look at that, ladies and gentlemen, right here. DraftKings, this is coming from DraftKings website, right? This is what they are saying. Are they lying? They might be lying, but they can go to jail for that, right? So here it is. This is what DraftKings is saying. DraftKings ended the second quarter of 2020 with over $1.2 billion in cash and no debt on its balance sheets. No debt, a lot of cash. I like that, right? So we believe the best products are ultimately the American customer. That's what the CEO said. As technology first organization, we continue to focus on bringing new and innovative products to the market and strengthen our engagement with customers. Okay. So they had 1.2 million to 1.2 billion in cash on balance sheet after successfully falling on offering. As a result of the successful follow on equity offerings when they sell on their stocks in June, and the exercise of public warranties. We already discussed what warranties were. Warranties is when they give you the right. That's what Southwest Airlines and Delta did. They gave the right of the government to be able to buy their stocks for a certain price in the future. DraftKings added over $800 million to its balance sheets and ended the second quarter with over $1.2 billion in cash with no debt. They added $800 million on its balance sheet and ended the second quarter with $1.2 billion in cash. That's pretty much from selling their stocks. The company is well positioned to continue to deliver its key priorities, which include entering a new states at the earliest opportunity, investing in products and technology, and create a new offering for American sports and American sports fans, and acquiring and retaining customers. In the second quarter, while several major sports leagues, including the NBA, remained at hiatus due to COVID-19, the company worked creatively to engage fans with new fantasy sports and betting products for NASCAR, golf, UFC, and European soccer. As sporting events began to resume, the company saw increase in engagement as the sports-based offering, which contributed to sequential month revenue. The positive momentum has accelerated with the return of football, basketball, WNBA, all of the good stuff. All right. In the second quarter, DraftKings launched sports betting in Colorado and iGaming in Pennsylvania. Since the closing of the second quarter, DraftKings has launched sports betting in Illinois. DraftKings is working to enter Virginia, Tennessee for sports betting, and Michigan for sports betting and iGaming. And all these states have passed legislation. All right. So here's their revenue, right? So their revenue, I'm looking at in thousands. So 70 million in revenue. Cost of revenue, blah, blah, blah. So they are losing. They're still a losing company. At the end of it, they're coming up with 160 million. This is their consolidated operation from the balance sheet. So this is the top line revenue is 70 million. This is the 3-month top line revenue, 70 million this year. They only brought in 57 million last year, but the problem is the cost of revenue, sales and marketing products is down. They only walk home with a negative 160 million. That's not good for me. I don't like to see you losing money. Then they have interest expenses, taxes, losses. Their net loss, okay, so they're losing money still. So they have a negative 1 point, so it's not a profitable company, but that's okay. All right, so this looks like the cash flow statement here. This is their net income loss. All right. Performer adjusted. Okay. Cost of revenue, sales. So it's a losing company. It's bleeding. It's pretty new. But I think the big thing that pushed them up was they went public and they made 800 million from selling their own stock. And now that they sold their own stock, they have 1.2 billion in cash with no debt. That's a big one. They added 800 million to their balance sheet with 1.2 billion in cash with no debt. That's nice. Even though it's a losing company, not something I'm going to be too crazy into. He said, Michael said, I fear the stock market. At some point, there has to be a correlation to the economic reality, doesn't it? Yes, but I feel as though, we have a lot of stimulus packages that are in. We're pumping a lot of stimulus money into I spoke about this. The government is pumping money left and right, right? So that's why I don't look at, that's why we haven't seen the economy go too crazy, but we're seeing gold prices go up with the economy. But I agree with that. Um, everybody's a trader because everyone's out. Everyone is out of work. When the trader runs out of money, it means 9% will lose. Only 10% can cover a trader. Okay, so he's saying that Luminary Wins saying everybody's a trader because everyone is out of work, so they're at home trading. When a trader runs out of money, it means 90% will lose. Only 10% can ever win as a trader, mostly only 1% in the long run. You're absolutely correct. So a lot of people love to jump into Forex, day trading, and I try to tell people all the time, you got to know what you're up against. Think about it. Look at DraftKings. DraftKings just went public to make money, right? DraftKings made 800 million by going public. They almost made $1 billion. So the reason why companies go public to make money. They're not there. If you think you can just open up your E-Trade and just day trade all day and option trade all day, you're going to be pulling money out of the market. You're right. You're 100% right. 90% of those people will run out of money and they will not be successful traders over the long term. What's going on, Miss Arlene? I made $660 off an NVAX. I had 5 shares. Wish I could have sold it sooner. My coworker made $1,000 on 10 shares. That's nice. This is what I would tell people. Some people ask me, Prince, should I buy Apple now? Should I wait till after the split, or should I blah blah? If I sell it now for a profit, if I sell it now and make $1,000 profit, that's good. If I hold on to it in 3 months from now, I make a $2,000 profit, that's great. If I sell it now, lock in the profits, jump back in when it pulls back, and then watch it go back up, and I make money, that's good too. So never, and I'm saying all this is that you got good, better, and best. So never beat yourself up just because you made money and somebody else made more money, right? So never beat yourself up about that. Hold on here. Why my comments are not coming in? It's not allowing me to read the comments. There we go. Well, it's saying I got some comments here, but I can't see my comments. Give me 1 second here. Let me refresh my browser. The refresh. There we go. Isn't the stimulant money artificial? What happens when reality catches up to us? America, yes. You're saying, hey, we're printing money, we're pumping into the economy, we're doing PPP loans, we're doing everything to prop the economy up. I always tell people the dollar is backed up by the government, right? So you are very wary of talking about that, right? You are very wary of what's going on. So I look at manufacturing dollars. Is it fake? Yes. I'm a bull in the long run on the market. There's nothing's going to change me like that, right? Nothing's going to change me about a bull run on the market. When I look at the economy, yes, we will have hard times. Will the economy crash again? Yes, but we will figure it out. We will make it back. Inflation, Julius saying, Michael, inflation and anarchy. Oh yeah, when the money catches up to it, you're right. Gennaro TV. What scares me about DraftKings is that it says in the fundamentals that it only has 2 employees. Is that a major concern? Though that does that matter at overall success of the company? That's my first time ever looking at DraftKings, Gennaro. I haven't really broken down what the company looks like on the inside with its employees, but I would have to look at the business model. Like, look at it for example. Does independent contractors, like, does it take the Uber? Just think about it, right? On your company, you may only be the only person in your company, right? You may be the only person in your company, but you may outsource somebody to make your flyers. You may outsource somebody to do your audio. You may outsource for somebody to do your. You may just pay somebody just to shoot your videos or whatnot. They may not be employees on your book, and that works for some business models. They don't need a whole bunch of people. So I can't say with them when I'm looking at DraftKings or whatnot. So I have to understand that business model is more, but by having 2 employees, that might help them with keeping their overhead down. So it could be a great thing. Lumiere Wayne says Tesla is barely profitable. You know that Tesla is worth more than Walmart. Can y'all believe that? Tesla, due to this market cap, is worth more than Walmart. Isn't that crazy? When you look at Tesla's market cap is larger than Walmart. Very scary. Julius Michael said, Julie, that's scary. Let's to eliminate. Here you go. This eliminate again. So now that we spoke about that, right? We spoke about our leading economic indicators. We spoke about how these economic indicators tie into it. Now, ladies and gentlemen, you can go out here and find weekly working hours every single month. Every month, somebody tracks the weekly working hours. Also, we also look up the jobless claims come out every week. The manufacturers' new orders come out every week. The index for new orders come out every week. Building permits, we can see them every month. We just went over that. We just went over how they look like. Are we building new houses? Are we building new houses? Are we completing the new houses? Are we even, just because you put in a building permit and get permitted, did this person actually go build a house? Did they complete the house? That's the leading economic. Because if people start building houses and abandoning them and abandoning them, what happens? He said, that's funny. He said Walmart is worth. Yeah, that's true. When you look at the market cap of Tesla, Tesla's over $2,000 a share, and I think it's probably going to hit 24 before it splits. And I think they're doing a 5-to-1 split. So when you look at that, you look at Walmart's market cap versus Tesla's market cap. Think about it. By everybody buying that stock, that has pushed up Elon Musk's status. I mean, now he's like the third richest man or something like that or whatnot. So yes, that's the thing I want to talk to you guys and girls about. But anyways, guys and girls, that's going to conclude today's episode. We talked about the leading economic indicators. These are indicators of where the economy is going. We also reviewed DraftKings. Somebody asked me to review DraftKings. So we talked about the leading economic indicators and how to look them up. You have a leading economic indicator that is produced every month by the conferenceboard.org. That's the index that compiles 10 of the economical indicators. Now, if you can follow that index and see what that report is saying, or you can look at the economical indicators yourself when you look up the averages, when you look up all these other things, right? You have to look them up one by one, and you can fix them up, right? Those are things you can look up to help you know get you a good idea what the economy, what it's doing, right? So when you look at that, you can look at, are we building new houses? Are we working? Are more people working? Unemployment, all of the good things, right? So these are things to make you a better investor. So when you look at things, you don't have to look at, oh, I heard or I think. You're looking at real reports that are coming across your desk as an investor to give you a good indicator of where the economy is going, right? But anyway, I thank y'all for tuning in. How you doing? He said, have you ever tried iced tea? I think he's talking about with the lemonade. We're going to have a great show tomorrow evening. I'll be on live with comedian and actor Rodney Perry. He's going to be talking about finances in the comedian in the entertainment world. He just fought a battle with COVID-19, and he's in the upcoming movie Coming to America 2 sequel. He's an actor that I grew up watching on different shows and seeing around. He's a veteran, someone I'm very impressed by, being in the comedy industry so long. So I want him to talk about his finances and the business side of being a comedian in the entertainment industry. How does that look? Can you retire? How do you retire? Michael says, Wicked show, very informative. Also, this Friday, we will have the retired CEO of Red Robins. She retired last year from the Red Robins. She will be on Friday morning. She'll be on Friday morning. So, yes, ladies and gentlemen, we're going to look at Tesla. Not Tesla, but we talked about the economic indicators. I hope they help you guys and girls out, become better investors. I got to get out of here. I'm hungry, and I got 10 people to call back. So I'm going to get that taken care of and all of the good stuff. Anyway, Luminary Williams, thank you. He said, thanks, Prince. He says, Wicked show, very informative. As always, I try to keep it informative, keep y'all some good stuff. But anyway, until the next video, podcast, cartoon, or whatever else crazy y'all see me do around the globe. Peace. Be safe. I'm out.